Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, April the 15th, 2025. As you know, not only is today tax day, but it's Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services for your educational purposes. So please give us a moment as we open up the charts. All righty, ladies and gentlemen, how about that dollar index breaking to some new lows? Getting the new lows, and we expect this will continue lower. Again, we are going to get retracements along the way, but the heads up is the bias is we're going to go down to about 80 is the plan, somewhere in the lower 80s to 80 area. And we're looking at, from the high level overview, back in 2007, we bottomed at 70.53. 15 years later, in 2022, we topped out at 114.72. So basically, all we're looking for, Emil, is a simple 618,786 retracement zone. So I do think we're going to definitely get into this 80 area, 90, 80 area, the sweet spot. But typically, I'm looking for a deeper retracement because this ends up being what they call super cycle wave 2 down. And typically, those are deep retracements. Jumping into the charting platform, we can see that we talked about this when we're starting to top in reverse. We figure we might get a little bounce off the Magic Fibo line. We expected to see a lower high, a lower low. Then we talked about another potential bounce here that at best we might go toward the Magic Fibo, but we were still looking for a lower high, lower low. And we've been getting lower highs, lower lows. And from the big picture, we talked about the swing point low to the swing point high. If we were to break below this 103.80 area, and I kind of said, as long as we break below 103, that was kind of the target, then we have a 75% chance we're coming down here to 98 area. Well, looky here. Almost touched it. So do I think this bounce is going to mount into a breakout to new highs? Absolutely not. Do I think this bounce is going to fizzle and make a lower high, lower low? Absolutely. And we're going to continue to run down toward this 98 area, 97 area. And remember, when you see these numbers, you typically need to draw a little buffer zone above and below, because all the Fibos in the world and CTAs and every trader out there can, let me make that a clean, straight one, can draw these on their respective charts. So this is why it's a zone. So you can't go by, well, I'm not going to take profits until we reach 98.759. Well, I still think we're definitely going to go lower, but this is typical that you get into the area. Sometimes it overshoots, sometimes it's a little under, but this is not over. So I still think we're going to come down here. I still think we're going to extend lower. This is a high probability target eventually. Why I say eventually? Because we're going to stair step our way. And a lot of times you kind of ping pong between these levels as we ultimately continue to break down. But remember, our target is way down here in between 82 and 78 range. I'm kind of thinking 80. If we underperform, maybe we come to 85, 88 level, you know? So this is certainly not out of the question that we might underperform and not get all the way down here. But let's see when we get there, right? So in closing on the dollar index, why did we spend so much time on the dollar index? Because when we know where the dollar index is headed, we have a great insight to where a lot of asset classes are going, including Forex among them. And this is expected, this little bit of a bounce is no big surprise. When you come over here to our software and we see the daily's oversold, and we talked about this slingshotting lower and lower as my weekly was continuing to push. So, Mr. Tucson, we're definitely going to have some sort of bounce. Maybe we slingshot one more time. The weekly pushes a little bit further, but we're going to have another little bounce at some point. We got our weekly cycle down from top to bottom. And what we're talking about was overbought when you're above 80 on the price action indicator scale. And then when you get below 20, that's oversold. And then the trend momentums, when you're above positive 50, is overbought. When you're below minus 50, you're oversold. So this is telling us that, yes, we could still push a little lower, but we're due for some sort of bounce. Now, I kind of played this out. We call this painting the Picasso. Now, I do not expect this weekly to cycle all the way back up. I'm looking for the weekly to go on and do these. Start to turn up, slingshot lower, turn up, slingshot lower, turn up, slingshot lower, and continue to push this lower and lower in the weeks and months to come. At some point, perhaps before we get to our 80 target down there, we might get a weekly cycle up, but I don't see this weekly cycle initiating from this point onward and upward for several reasons. A, we have not reached our official target. We're close, but there was a 75% chance we were going to reach this number, 70+% chance we're going to reach this number, and we're not there. So yes, I do think the weekly is probably going to give us a little bit of a push up, and then it's going to slingshot lower and push us lower, right? So don't worry that this is going to go ripping and breaking out. It is not. At some point, you can see our Magic Fibo, this orange line is critical. Magic Fibo is starting to slope downward. We were sloping upward when we were climbing higher, kind of correcting, we flattened out as we were chopping. And then as we started to break back down, it's turning down again. So I would not be surprised at some point we're going to rally back towards that Magic Fibo and get rejected. That's typically how it happens. It doesn't mean we have to do it now. Just like I said here, I thought we might get up that far, but we didn't do it and we broke down. So I do think before we get to 80 and our ultimate target way down the road, we'll probably get some sort of rally. Well, remember, this thing continues to decline and sloping downward the further we keep breaking down. And obviously, we believe we're going to break down further because our target is down here, which means that Magic Fibo line should start sloping downward. And at some point, we'll probably rally into it, get rejected, and continue this stair step. We call this the Fibonacci ring or ladder, right? And we got different levels. So typically, the way it works, you go between levels in ping pong as you go in between those levels, and you see you start to stretch that out. And that's kind of what we're doing. As we start breaking down, we reach a level, we bounce, we go to another level, we bounce, we kind of ping pong between the levels, and ultimately we're working our way down. I've been talking about these levels for several weeks to months, and sure enough, we're finally getting there. That's why when I talked about this from day one, that it was going to take years from us. By the time we topped out in 2022, it would take multiple years to get down here. And as we still almost 3 years into this picture, this is a beautiful one, ABC2. Wave counts change along the way based on pricing, but what did I always say from day one? from that top in reversal. I said, in my humble opinion, James, no matter what, even if we rally back, I expect it to remain below 109. We remain bearish. This has been on the chart for multiple years, long before we reach this target. And that's what I was saying, and that we're likely to make a lower high, lower low. Well, there you have it. Here it is on this big chart, and we have that low, lower high, lower low, and the process should continue. So always check your software, because when a weekly starts getting oversold and a daily's oversold, starting to PAI hook, that is telling us we're due for a bounce. Software is so smart. You see this little yellow trigger right there? That's telling you to take profits on that down move, because it's telling you we're expecting some sort of bounce. And they come in when your software gets to extremes. And this is just a good idea to take profits. You never go broke taking profit. Now, again, this bounce should not grow into new highs, obviously. We're definitely looking for a lower high, lower low. Amen? So expect that this bounce will terminate at some point and make a lower high, then a lower low. And it may just be another one of these, what we call the slingshot phenomenon, where the price action indicator goes racing off and it slingshots back down like this here, where the red and or red and blue race off from green money flow and slams back down, and that's beautiful slingshots lower. We did it here, big lower. We did it again and again. So we've been slingshotting lower multiple times, and this is by design. Our daily cycle from overbought to oversold, and then slingshotted multiple times over and over again. And this process is how that weekly ended up cycling. That's what makes the weekly cycle. In other words, there's no way a weekly can cycle without a daily cycling and multiple slingshots. So, do I think this is going to reverse at some point? Of course. It's an oscillator. It goes from one extreme to the other. That's its job. And certain market conditions, you tend to stay overbought and slingshot higher and higher during that big run into 2022. And then other times you can slingshot lower and lower and lower as you go down. So I'm expecting, yes, this will probably turn up, but I'm not looking for, and this is what we call painting that Picasso, I'm not looking for this to go and cycle up right now. Even if it did, what if, William Bruce, what if we get a weekly to cycle? I'm still looking for a lower high and a lower low. So even if this were to cycle up, cycle back down, we're not going to end up with a new high. We're definitely going to end up with some sort of lower high, lower low. But if I had to draw it and say what's going to transpire now, I think we're going to see this weekly do the same. Even the prior week, when the weekly started engaging up, what did I say it was going to do? It likely disengage, so the weekly could finish down, and the daily would slingshot lower and lower as we break down toward those targets. So far, so good. So we may at some point, Mr. Tucson, we're going to get a little hook up and likely see the weekly go up and slingshot lower as opposed to cycle. But I will throw that out. Even if the unthinkable happens and the weekly cycles up, we're not going to go breaking new highs. The technical picture shows we need another push lower. And even if it's just equality with the push lower initially, we're not done. We need to come down around 94 to kind of equal that move. So you can use your lines, for example. You can use like a trend line, and you go from the top. See if I can do that again. You come from the top to the bottom, which is this swing point low, prior low. And if that's the initial move, then we want to move that same point from this previous high over here. And that puts us about 94. See it? right where I was talking about. So that's minimum. Even if this is just a dud, we should at least go toward 94. And typically, you get extensions further down, which puts us into the 80s. That's kind of the plan. So my Fibonacci's on here start to show minimum 94 is where we would get equality with that initial move down. And typically you can extend below to extensions. So we'll see how this plays out. I always said that it would take multiple years before we would finish our destination. And we're almost 3 years in and we're nowhere near our destination. Amen? So I do think we got a long way to go. So in closing on the dollar index, expect that this little bounce is going to be short-lived, and I don't mean only today. Could be, and it could start breaking down lower, but we might get some sort of bounce. But I don't expect it to break out into new highs. I don't expect us even to go back above this level. And at best, even if we were to travel that direction, this slopes down. Every day we get a new daily candle, this is going to be sloping lower and lower. You can see the curve is starting to push lower. So even if we were to get a big rally up, as this is pushing lower each day, we'd probably reach a lower high, run into that magic Fibo below this swing point. Just like we did there, we got a swing point there, and we went lower, and we didn't get to the prior swing point here. We didn't get to the prior swing point there. So each time we rally, we make a lower high. We rally, we make a lower high. We rally, we make a lower high. We rally, lower high. We rally. So I definitely don't think we're going to get this high. I'm not even sure we're going to get that high off the last little bounce. So don't be too aggressive in shorting the euro and the pound, because I do think they're going to dip a little bit while this bounces, but we want to continue to buy the dips in those we talked about. So looking at the euro, who could have guessed? Who could have thought? Who could have anticipated, Mr. Tucson? We were going to go into that 136 area, 113.60 area, and push toward 114.95. Back when we called the bottom, right here, what did I say? I said once we break above 108, we were going to go to this target. If you've been following and seeing this, this is a high probability target. I kept saying it over and over. And I even got in early to say that I'm going to call the bottom here, even though there was far cry from where we needed to be to kind of, yeah, this is over when we started to break above this level. And we said we could go long, make hundreds of pips till we get to the magic Fibo. And then from there, if you were real conservative, wait until we get above that 108.50. And once we break 108.50, then you have a good 600 point run, 5 to 600 point. Bingo. And this was a 5 to 600 point run from there, from 101 to 106-ish, 500 plus. And then we said we'd go on and make several hundred more. There you go. That's what the technical picture gives us. And that's what the software was screaming at us way back. And I even drew this. This is a monthly. I said when this started to turn down and this was pushing lower, I said, what's going to happen? We're going to slingshot back up. We're going to start pushing back up. And the months to come, and this will go back into overbought. This will go back into overbought. And then how do we get up here? Years later, monthly's going to turn over and start slingshotting. That's how we get to those targets. Just like we did over here. They could necessarily be small, they could be medium size, large size, but we just kept grinding higher and higher to all-time highs due to that monthly slingshot phenomenon. That's what I expect to see in the years to come. So far, so good. My weekly. ended up making a cycle. We talked about that. We had a weekly oversold, we had a daily oversold, and we talked about that very specifically, looking for this bounce to then set the tone to go much higher. Notice the euro is breaking out from this consolidation zone. A few years back, when it bottomed in 95.95 area back in 2022, what did we say? Man, this is a great opportunity to go long the euro dollar and stay long the euro dollar for years to come, because we anticipate that the euro is going to go, and I'll go to a monthly chart on that one, is going to go up to this 135 to 145 area, basically a 618/786 retracement. We're overdue. Go back multiple years ago, and I kept telling you the euro was due to go to parity and below. Took 15 years, but hey, it got there. And now what? This is not going to go breaking out to all-time new highs. It's going to make that nice little 618/786 zone retracement. So I'm kind of fine-tuning my target somewhere around that 140 to 145, a little bit higher than the 618. That's the plan. Notice what we're touching. We're touching the monthly Magic Fibo. How do you like that? So no surprise that we might find a little resistance here and get a little pullback to then get enough head of steam to go ripping through it. And I would not be surprised in the months to come, as we go breaking above the Magic Fibo, we come down and retest it to bounce off of it to start our stair-step higher scenario headed toward this target. And eventually, as we went in this major downtrend for many years, our Magic Fibo was sloping upwards to flattening out to now it's been sloping downwards because of this big run down. I say eventually we should start flattening out and might even start to tilt up a little bit by the time we get way up there. All right? So that's clearly the plan. And we paint the Picasso utilizing this software. And with a daily oversold, now the euro daily being overbought, and on the dollar index, the daily is oversold, no surprise, we're looking to see some sort of retracement. Amen? Do we retrace and get a daily cycle down? Maybe. Do we retrace and slingshot back up and make another higher low, higher high? That's also possible. Well, how do I know the likelihood the daily is going to cycle all the way down? Well, if we can get the weekly, this is the uniqueness of the software. Everyone knows that if the weekly ends up hooking and crossing, like over here, you get the PAI to hook down, you get the trend momentum to cross, that's the green below the red line right there, and that's called the PAI hook trend momentum cross. PAI hook trend momentum cross. If a weekly does that, then that means the daily is going to cycle. Options traders can eat this alive, because once we get a weekly hook and a cross, we know the daily will cycle down, and it takes about 2 to 5 weeks for a daily to cycle down. It takes about 2 to 5 months for a weekly to cycle down. So options traders can get an idea. How far do I need to push the option trade out? I need 2 to 4 weeks, 2 to 4 months. What are we trying to accomplish here? Along with our GPS coordinates, where we think the markets are going, and my turn-by-turn GPS coordinates, spot on. That's what we like to bring you. So, any questions? I do expect some sort of consolidation / chopping up and down, sideways to lower as we depressurize. But just like I said on the dollar index, I'm not really looking for this weekly to cycle all the way down right now. I'm looking for it to turn over to slingshot higher, like over here. Slingshot, slingshot, and we kept grinding higher. So just like over here, when we were moving lower, we kept slingshotting lower and lower and lower and lower and lower and lower. Well, I'm really not looking for the weekly to do that right now. I'm looking for it to turn over to slingshot higher So what if we get the weekly to hook and cross? Then we salivate to buy the dip when my daily gets oversold, and we buy. Just like we talked about buying it down here. And even after that big pullback, I was saying you want to keep buying the dips till you at least get to the Magic Fibo. And if we start breaking above that 108, you keep buying the dips till we get to that 113 target. Now we reach that target. Now what's what? Keep buying the dips, because our target, remember on the monthly, is way up here, still thousands of pips away. And we're just about to break above the monthly Magic Fibo line, which becomes very bullish. All right. So keep buying the dips, expect a pullback and an opportunity to buy that dip for us to continue on with our next target. And what is that next target? Once we break this say 15, 115, we're going to be targeting 118.50. Amen. Once we break this, we're going to go targeting up here. Now, that doesn't mean once we get a daily candle close above 114 or 115 right here, 114.95, 115, that it's just going to go straight up every day, straight to 118. No, it typically always stair steps and could take weeks to get up there. Or it could go popping very quickly. But that's the plan. When you keep buying the dips, next target up the food chain is 118.50 after we get a pullback. Hint, hint, hint. We're going to get a pullback, not only because I see it now, but you can look at the software screaming, time for a pullback. My monthly's still up, steep slope angle separation. So the weekly, at best, Mr. Tucson, is going to turn over to slingshot higher. That is the plan. It fits the technical picture. So during that period, how much do we hook? Do we officially hook and cross? Or do we just kind of grind out while we continue to run? And we can flatten out while we continue to run. So, but if we do get a hook and a cross, then expect the daily will cycle all the way down. And this will be a salivate territory if we get that, to then buy the dip and expect us to what? No matter how far we dip down, we're still going to go back to the original targets. And once we break that 115 top, we're going to go up to 118.50. So you target hundreds and hundreds pip more. Pound dollar, ditto. We're expecting the pound to do the same thing. We're going to slingshot higher and higher on this monthly. We're going to turn back up, turn back up. Then we're going to turn over and slingshot higher and higher, working our way up toward this 50% slash 618 retracement, kind of fine tuning somewhere around 160, maybe 165. Really not expecting it to push above 170, but that's the plan. Thousands of pips to go, and that's what we're looking for. Why are we expecting a little bit of a pullback? Well, same thing with the euro. My pound daily's not quite as extended, so we probably get a little push further. Then it'll turn over. So I'm looking for this maybe to rally a little bit more, then give us a pullback where the daily turns over to slingshot higher. And actually, that's the weekly. So the weekly's not quite finished. So what does that mean? We probably going to see the daily do another slingshot higher, slingshot, slingshot. That's what we've been doing the whole point. While we cycled, slingshot. Another one, slingshot. Another one, slingshot. Bigger one, slingshot. Still making higher highs, higher lows. Any questions? So we haven't reached our target on the pound yet. That's why we're going to go much higher. Unlike the euro, we did reach the targets. The pound, we're not there yet. We still got a ways to go. 136 is my 75% chance target. My 137.97, basically 138 area, is my 70+% chance. And we're sitting at 132. We're breaking the previous high here. That's good. But we're working 400 pips more to get up here, 600 pips more or so to get up here. Looking good. So what do you do with the pound? Like we said way back here, when it hit 121, time to buy the dip. And it's going to go where? Up here. Euro's done it. Pound's almost there. So we still got a ways to go. Keep buying the dips. Once we get up there, probably again see some sort of retracement. You typically just don't run through extension, 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 and never look back. I mean, there's some big extensions up here, and we're expecting to come way up here and then some. Remember, 160, 165. So I'm looking for somewhere in this 2.618 slash 3.618 zone. And this is where we're going to run to. That's the plan. So we're going to ping pong between these levels and still take multiple more years to get up there, in my humble opinion. But was that not a great call? Remember here, I said you want to go long until you at least reach the magic Fibo, expect to pull back off of there. Then when it finally breaks, look for a retest, and then boom. Well, we finally got a big retest. That was a kind of scary. You thought, ooh, is this going to go tank? Salivate City, right here. We came back, did a measured bounce on the magic Fibo to now it's extending, headed towards its breakout of 136, 137.90 area. Amen? So definitely keep buying the dips. Dollar yen, again, is expected to continue to break down. We're closing below this 46 area, and we got some candle bodies now. So the probability we grind down toward 136 right now is up of 75%. From this low to that high, we broke the 618, we broke the 786, and we closed below yesterday, and so far today we're still below it. So this is a 75% chance we're going to visit 136. High probability. Yes, there's still, say, 25% chance we don't get there, but the technical picture says this is where we're headed. So I like it, and a 70+% chance we're going down about 134. So we have upwards of a 1,000 pip trade that is unwinding. When we talked about breaking 146, we're going to go to 136. We've done it. Now we're at 142. We still have upwards of 800+ pips or so to go. Still beautiful. Pound yen. It too came down and bounced off the 786. I really want to see us close below that. That's a major battle zone. It's tested. So no surprise here. So I'm watching this closely, but the bias is the same. If we can get a close below this 187 level, and we haven't closed below it yet, we're right at it, right? We dip down, we bounce back, we dip, we bounce. So the dollar yen has already set up the move lower. The pound yen is yet to set it up, but that's why we got to see a close below this level. And you see where that big rejection wick and where we closed here, we still haven't closed below this level yet. That's what I'm looking for. So when we actually close below 187, close into the 186 or lower, then the tone is set to go to 177, 174. So keep an eye on this one. I don't expect this is going to go breaking out. I suspect we're going to get a lower high, lower low. But once we finally take out this battle zone that we've tested multiple times, test, went higher, came back and tested here. So once we close below that zone, then we'll target 75%, 177, 70 plus plus, 174. And we continue to break down, perhaps down to 167. Amen? So this one's not set up yet. The dollar yen has set up, and here's your targets. Let's continue. what's going on with the markets, this crazy market action. You know, a lot of people believe, and you hear the talking pundits and talking heads on the media, and they say it's all about tariffs. It's the tariffs doing it. The tariffs. It's the tariffs. It's the tariffs. It's not. It has nothing to do with the tariffs. That sounds insane. Well, when he talks tariffs, it goes up, and when he says tariffs, it goes down. What do you mean it has nothing to do with it? This technical picture, as I was calling for months and months ago, when we got our correction here, we talked about it going in the 6,000 range, and we're going to get some sort of correction. I was calling for this long before it even said, didn't matter who was going to be the president, didn't matter who won or lost and who became president. We're going to go to all-time highs, and then we're going to get a pullback. Well, here you go. Now, don't get ahead of yourself thinking this is a V-shaped recovery. It might. I mean, we called for this going into late summer, like early fall, maybe late fall. We'd go on all-time highs again. I'm really looking for the ES, SPX, S&P 500 to go up to the 65, 6,600 range, below 7,000 before we break and we go below 4,000. I still think that's going to happen. Now, on the bounce, where are we on the bounce? We're basically nowhere. We bounced. Yeah, it's significant. I mean, we came down from 48.50 up to 54, almost 1,000 points. That's hundreds of points, so I won't say it's nothing. But in the sense of the technical picture, until we start breaking back above the Magic Fibo line, game on for us to start heading to all-time new highs. So we still have to break that 56, 5,800 zone, basically this swing point. Then it is highest of highest probability, Mr. Tucson. We do that. First target, 6350 area, 6340 area right there, 75%. Then we got a 6500, 70 plus percent. And we might even blow off top toward that 66, stay below 7,000. And then we get the Elizabeth, I'm coming to join you, honey. Is it possible we make a lower high? Sure. If we rally into this rejection zone and we fail, this sets up a much lower low down in this zone. If that doesn't hold, down in that zone, which is the monthly Magic Fibo line. That's what these targets are. So be careful that this bounce looks good, but until we break the 56, 5,800, this pink box up here, then it is all game on. We're going to make all-time new highs. Highest of highest of highest probabilities. We take above the Magic Fibo and take out the 56, 5,800 area. That's that pink box. Then it is game on hundreds of points later. Right? 500 points later is your first target. About 700 or so points is your second target. And maybe we top out about 6,600, which would put us almost 1,000 pips above my 618. I'm really not expecting this to go breaking into the sevens before we break down below 4. Still think that's coming. So put these levels on your chart. Simply run the swing point all-time high to the recent swing point low. Look for that 618, 786 zone. And when you look at these type of measured bounces and things we call them, that the zone is from 0.5, 0.618, and the 786. That is the zone in which you can get this to work. So if we get up in this zone and we fail, that's setting up not only a new swing point low, but a substantially lower low. And if this continues to break out and we start closing above that 56, 58 zone, basically getting above the Magic Fibo line, that sets the tone. We're going on to all-time new highs again. Amen? And we've been calling for this 64, 65, 66 zone for many, many, many months now. And I expected, go back in the archives in these past classes, where we clearly show that we expected a bounce to come down at least to the daily, if not the 3-day, maybe even as low as the weekly. Well, maybe even ended up being the winning ticket. This is a beautiful measured bounce off the weekly Magic Fibo line. Unbelievable, perfect bounce off the Magic Fibo. Now, just because it bounced, when do we start to salivate about our targets up here? This is a weekly chart. It'll probably take multiple more weeks if we're going to do it. But when do we start to salivate? We got to get above that 56, 5800 zone. You can see all the consolidation. This is a swing point high, a little support zone, another resistance zone, and then you come up a little higher. There's a resistance zone, and then it turned to a support zone, and that's that 56, 5800 zone. So mark that on your chart, Emil, right now. Don't forget. Put that on your chart. 56, 5800. And James, we break that and game on. 63, 65, and look for us to probably blow off top into that maybe 66. I don't think we're going to cross this barrier right there because that holds my statement of before we break 7,000, we're going to break 4,000. Amen? Still holding true to that. Not the prettiest of print there. Kind of tricky using this mouse and thing, but that's the key. The likelihood we go up here is not off the table. Remember when this was happening? I said it is not off the table. We need to see once we get the bounce, can we break back above this, set the tone to go higher? If we get rejected from that, and we break down, then not only do I expect a new lower low, I'm expecting first stop somewhere in the 4,000, 5,000, 4,000-ish zone. And if that doesn't hold, we're going to come down here toward the monthly Magic Fibo line. So let me show you the monthly. And that's where it sits. Yep. The monthly Magic Fibo line. So if we get rejected, and we can't break above the daily Magic Fibo line to set the tone to go on to all-time new highs, and we get rejected out of that, and we start doing bigger than a 618 retracement. So how do we figure that out? We can show you on a daily chart. So this is where it would get critical. From the prior low to the high, so from this swing point low to the high, and I suspect we're not done here, right? Meaning, yes, we can still get a retracement, but I don't think this is the end. Where this low to that high, we can maybe get some sort of retracement back this direction to bounce to still go up. I still think we're going to go test this zone. Even worst case scenario, remember, what we did not want to see is a big 3-wave move where we stop in our tracks there and then get rejected. That sets up a big, another 5-wave down, big move down. And that big move is way off the chart. First target's down in this zone, second target way down here, and you can see some Fibo lines in the middle of here, but that means significantly lower. So if we don't get the blow off top, my call months and months and months ago that before we break 7,000, we're going to break 4 still holds true. But I was thinking we'd get one more blow off top before we got there. Amen? Any questions? So this is going to be some tricky maneuvering here. We've got to go and break above this 56, 58 zone. Key level is going to be the Magic Fibo right in the center. We start closing above there, then the tone's kind of set. We're going up here. Amen? If we get rejected, then it sets up not only a new low, but a significant lower low by hundreds of points. Any questions on that? In the interim, what I was showing you on this daily chart, stretch that out. From this low to that high, we want to see this zone hold in this 0.5 to 786 zone. This must absolutely hold on any pullback, meaning we rally up, we come back down, retest the zone to then go up higher. We don't have to dip down here to do it. I kind of would just like this thing to just keep grinding, grunting, laboring, continuing to go higher and close above the Magic Fibo line to set the tone. We're going to all-time highs again. That would be lovely. In the interim, be careful because we have ripped higher and at some point it loses its momentum and we might get a little bit of a pullback. But as long as we hold this zone, so I don't see a new lower low yet, right? We start crashing below 5,000, 49.70 area. We start closing below that. Then by all means, we're going to make a new low, 47.50, 46.60, and likely going to go to 44. This is more in tune where I was thinking. If we end up failing here and breaking down, we're going to go here. And if that doesn't hold, then it is the monthly Magic Fibo we're going to go and visit. Amen? What do we have going for us? Well, some things I copied, and I had to copy it in two pieces. I didn't quite get the full piece. This is looking at to buy or to buy. This is a scenario of CTAs. Over the next week, Flat Tape says minus 17 billion to sell globally. But look at SPX flow, plus 5 billion. Up tape, meaning, we start continue to decline. Globally, they're going to sell 17 billion. SPX looking to buy 5 billion. Up tape looking to sell 10 billion globally. 7.4 billion SPX. Interesting, isn't it? So what does this tell me over here? We're likely going to be bottoming. Maybe we've gotten the bottom already. But look at the down tape. Oof. Ouch. Minus 24 billion to sell globally, but 3 billion to still buy. So SPX looks like we're going to get some money flowing into this area. That's over the next week. Over the next month, Flat Tape, 1.4 billion to buy. Up Tape, 67 billion to buy. And look over here at SPX, 11 billion, 23 billion. This is the CTAs, trading algos, are triggered to do some major buying. And we talked about this weeks and months ago, that coming into this time frame, it looks like the algos were ready to start buying. And this is showing the global flow and then SPX. And then I had to break it into a second part because I didn't quite get the bottom. And then going down to let me show you that right there. Notice we got Flat Tape, Up Tape next month. And then we got the last one is the down tape, which got cut off and here. But even on the down tape, smart money keeps buying. That's correct. And looking into even the month, the money flow, look, plus 1.4 billion. This is global. And then 67 billion. And then even if it's a down tape, they're going to sell 9 billion. But look over here, still going to keep buying. 8 billion, 23 billion, 11 billion. That's over the next month. This is over the next week. 3 billion on a down tape. Up tape, 7 billion. 5 billion. So all of this number, smart money, is flowing into SPX. So that bodes well for us to go to all-time highs. It kind of looks like to me. Amen? But until the technical picture screams and says it, then I just can't say. We may definitely keep buying because we're going up here, bet your life, bet the house, send the whole everything it's going up here. You know, it could change. Anything can change, but it does look good. So be careful that we go breaking up, you know what to shoot for. 63, 65, 66, kind of my top. Under 7,000 is the key where I think we're not going to break. And then we're going to go breaking 4,000. And that the only magic Fibo we have that's below 4,000 happens to be the monthly. So let's go to the monthly for a second. The monthly, we haven't visited in a very, very, very long time. Even COVID, look at that. Even COVID, we didn't touch it. How about that? We got to go way back into the financial crisis. And we broke below it and then tested it a couple of times as late as October 11. And then we just went on a run. So this is what Elizabeth, I'm coming to join you, honey, looks like. Remember this? We talked about several times that back in the bubble.com bubble burst, we got a big sell off and then we rallied back to those highs again back in '07 till we went to financial crisis. And we did this big three-wave correction and we didn't go breaking all-time highs again for like 13 years, from 2000 to about 2013. We need one of those. Since then, since this financial crisis bottom, this is a bubble pattern. It is forming a psychology of market cycle, right? The bubble pattern. We've shown you that numerous times. I'll probably pull that up in tomorrow's class to remind you. But this bubble pattern has been screaming. That's where the before we break 7, we go breaking 4 came from. And we may come all the way down to this 2000 or lower, revisit this zone. I wouldn't be shocked after we're done, we're down into the 2000 or so range, testing these prior breakout zones. That's typically what a bubble pattern does. It goes up exponentially and then it comes crashing down back near the base. And we're talking this base in this area. So around that 3,000, 1,500 range, somewhere like that. So I don't want to get you all doom and gloom. We can make a lot of money down here. So don't think, uh-oh, it'll be a great buying opportunity once we're finally down here. And even during that period where we didn't break all-time highs for like 13 years, we had from '02 to '07 like a 5-year grind where we just went higher and higher and higher. Basically doubled in price from 700 to 1,500, 14 plus. So price doubled even in that corrective action. So it's not all doom and gloom for that long. You make money to the downside, you make money to the upside. And there's many ways to play it. But this is what we're looking for after this magic, just unbelievable run. We need some sort of correction back to reality. The charts always do it. Go back in the history of the world. We always get big runs and we get big dips. Come back to reality. And it doesn't look like much here, but back in the day, in the 70s, this thing went from $68 all the way up to, my arrow's in the way, over here from $68, where was I? Over here, $68 roughly, up to about 123, more than doubled. Stock market here more than doubled during that period. And then it came crashing back down. It always does this. And I laugh at all these talking heads and pundits and legacy media saying it's all about Trump and his tariffs. It's the tariffs that's killing it. It's going to destroy the world. It's the tariffs. None of it is tariff related. And even when we got these big corrections here, that was in the charts. I mean, look at that run up, and we needed this big correction. We called this way back during the financial crisis, and it was due. I mean, you just don't go straight up without having some substantial corrections. And look at this run up. We called the correction, well, we didn't know about COVID necessarily, but that happened. Then we called the 2022 correction and the 2023 correction before the Santa Claus rallies. We did pretty good on those, calling for bottom and reversals. Well, this is still exponential. That is a parabolic move up, especially you start looking from some of these lower part and stretch this thing out. That's about as vertical as it gets, right? Just ripping higher. So there's no reason to think that it doesn't matter what. We need that correction to come back down to reality. That is the psychology of a market cycle, bubble pattern in the making. Now, that doesn't mean we can't go on all-time new highs again. Sure, I'm kind of leaning that way with looking at what the algos are going to be doing. That's a lot of buying, even with the global set to sell. That's a lot of buying in SPX, the flow. And if we do get over the next month, that's a tremendous amount of buying. Add all that up 5, 7.5, and 3, over 15 and 20, 30, 40. You're talking like 50 billion plus dollars and then some. So that could easily push all-time highs again. But be careful. We need price to prove its intentions. And zooming this back in, we need this level to hold. So while we're consolidating, if we get this pullback, as long as we hold in this area, no reason to believe we're not going higher. And if this holds true over the next week, they start buying in the billions of dollars. And then over the next month, we're into the 20, 30 billion plus more dollars of buying. No reason to believe we won't go breaking out. But be careful today. We may get a pullback because this has been quite the run. And typically you stair step your way higher. And in a healthy market, you always get pullbacks. I mean, not to jump into crypto right away, but Bitcoin is a bubble pattern every 4 years, right? Go to all-time highs, well, to the all-time results here, and we'll push it out to say a week. So you can see all the prior halvings. And in every time, these are these bubble patterns that play out into the halving. You get the big rip, you get the bubble pattern correction, you get the big rip, the bubble pattern correction, the big rip, bubble pattern correction, big rip, bubble pattern correction. And as you zoom in on this, it looks like all hell's breaking loose. When you're ripping up to 19,000, and next thing you know, you're sitting, move my big cursor here, and it doesn't look like it because this is log scale. But when you're up here at 19,000 and you tumble down to 3,000, that is significant. Right? And on this log scale, it doesn't look like much. It just looks like a little simple pullback. But in the day to day, you zoom in, this is a substantial 70 plus 75% decline. That is rough. That's bubble pattern all over it. And it's done it every time. So Bitcoin still, in my humble opinion, we got to start breaking out, but it's still likely to go to that 150 target. But then we're going to get the next pullback into 2026. So we've learned how to trade crypto effectively. You buy on the 22, the 26, the 30s, etc. And then you start selling when you get to the highs in 21, 25, 29, 12 to 18 months post halving. But you buy well before the halving. You buy at the low that happens every 4 years, 18, 22. We bought them this last time. The next time we should buy them is probably 26. And we'll be looking to load up on crypto in 26 and then sell in 29. I digress with this, but it's the same bubble pattern and it doesn't look so much. But when you start looking at on different scales, that is significant pullbacks. And you stretch that out and it just looks like it's falling off a cliff. Everybody knows when you look at that, it's like Bitcoin's a scam. It went straight up and then it went straight down. Look at that. Insane, isn't it? When you start looking at the dollar ranges and how far that moved. From up here at 19,000 to 3,000, that is significant. All right. So back over here, ES. Same thing as SPX, but I like the futures market because they're open 24/6, basically. And they only close on Saturday. They reopen Sunday, so you get a lot more tick data in here. And then they close for an hour when the markets close and then reopen, and you got overnight price action where SPX, you get gap ups, gap downs all the time. There's no price action in there, where ES, you get the price action. So I like the more price action, the better. So same rules from the recent low. This is an area that must hold from our swing point low to current swing point high. Long as we hold this zone, is zero point 0.5 down to 786, basically the 5,000 area. As long as we hold that. Now, again, we don't have to do this. We're grinding, and we could continue this slow grind and continue breaking all-time highs, but maybe we get some sort of retracement in here to continue higher. I don't really want to see another big retracement, but as long as this area holds, great. If not, and we start breaking below this, then we're going to make another low, and that might do it and set up the much lower lows into the 4,000 range. And if that doesn't hold, then we got our Magic Fibo line, which is a monthly. You'll see over here on a monthly chart, is down here around that 35, 33 range. So we don't start holding this area, and we fail, make a new low, and we don't hold the 4,000-ish range, then the doors ajar to start going between your Fibos, 41, 43, 39, 37, 34, which is putting us right into that Magic Fibo. This is going to come visit. We're absolutely going to come back to the monthly Magic Fibo. Even if we go breaking all-time highs, we're still coming down here. The technical picture is screaming that's part of that bubble pattern. And that's probably not going to be the low. Like I was saying, we might come back toward these lows over here where we had that breakdown from the dot-com bubble burst into the financial crisis. And ever since that financial crisis reversal I just showed you on SPX, this is a bubble pattern in the making for us to crash down somewhere in that zone. So Magic Fibo, way up here, we got a 3,000 range. I think we're going to go lower and start pushing the 1,500 to 2,000 range before we're done. Now, this could take many years. I don't want you to freak out. Oh, it's going to go from 6,000 down to 3,000 and lower, maybe 2,000. No, it's probably going to do a big multi-year correction, kind of like we did over here, where we rallied down and we got a recovery and another push. This could take multiple years for us to do a big three-wave correction. Come down to Magic Fibo, we bounce, we go up for several years, then we come down further and do a big three-wave like that. That took multiple years. I see that happening. So the only way I can draw that on this chart is push this way over here and say we get the rally into this extension, blow off top. Then we start looking for a multi-year correction, come down and we find the Magic Fibo. We bounce off of that. Then we get even another push lower. And who knows, maybe it's into the 2030s. I don't know. It's hard to tell timing. But then we'll go on and break 7,000 and continue much higher. But this technical picture is screaming we need a big retracement before we can continue to make this run. Amen? And that had nothing to do with who's the president, has nothing to do with the tariffs, has nothing to do with anything other than the technical picture. So don't listen to the news. Separate the news and it'll unburden you. because the talking heads are full of bull anyway. We'll see how this plays out, but I'm holding true to my call. Before we break 7, we're going to break 4. And the only thing that's below 4 happens to be my monthly Magic Fibo. And that Magic Fibo, we are going to see it. We didn't see it in COVID. We didn't see it until way back in 11, and we broke down during the financial crisis. Well, this is part of that, Elizabeth. I'm coming to see you, honey. And I suspect we're going to get one of those where we actually start flattening out when we start getting much lower, kind of like we did over here. But I would suspect we're actually going to break below the Magic Fibo on a monthly before we're done. Then we'll start working our way back up into the 2030s, etc. Kind of long-term view. Short-term view, rinse and repeat until we see price prove its intentions. We must go with what we see. And right now, that is, we have to break above this all-important resistance zone. And that is my what? Got to get above the Magic Fibo. We need to break above this 56, 5800 zone. That's here. That's my 786. And we can go all the way to 50% retracement. That's why we're touching that zone and having a little trouble. But until we start getting above the Magic Fibo, then we can start to think, aha, now I'm feeling warm and fuzzy, Emil, that we're going to go on to all-time new highs. 63, 65. This becomes a 75% chance likely. This becomes a 70 plus percent chance likely that we're going to do it. If we can close above this 56, 58 zone, and I feel real warm and fuzzy once we're above the Magic Fibo. Amen? Now, what that doesn't mean, Mr. Tucson, we close above the Magic Fibo, and then we certainly just keep going straight up every day to reach these targets. No, you still run your low to high, and as long as your 618,786.5 zone holds, so you would do the same. Like right now, this is where if we start correcting, we need to hold. But what if, William Bruce, we actually, let me get this out of the way. I'll just move this for a second. And what if on this run here, we dip and we get up here and we start reaching the 56, 5700 range, somewhere in that area. And then we get a pullback from the low to the high. As long as we would then hold the 618, 786, see right there, 53, 52, still 5,000 zone. So this box could be expanded to this zone. And that's assuming we run up here to test at 56, 5800. And before we reach our high probability target, as long as any pullback is held within this range, these are still valid. Amen? So that's all I look at. Every day I look at thousands of charts all day long, week long, month long, year long, decade long, multiple decades. That's what I do. And we close above the Magic Fibo, warm and fuzzy. We're going to 63, likely push even towards 65, 66. But even if we start getting the close above and we think we're going there, any pullback has to hold the 618, 786 zone. So you run the low to whatever that high is during that pullback. As long as that holds, that's still A-OK for us to continue toward these targets. Be careful. If this rally turns into a three-way and we get rejected from there, then it sets the tone. Not only are we going to break new lows, we're going to make substantial new lows into the lower 4,000s. And if that doesn't hold, then toward the Magic Fibo, which is down here around that 3,500 range. And that's the Magic Fibo on the monthly chart. Amen? Any questions on that? So looking good, especially with the algo information. If you're joining us late, looks like the algos into the SPX. This is over the next month. This is over the next week. Globally, we're looking at a lot of selling action with the certified, with the trading algos. And over the next month, we have some major buying. Look, 67 billion. And if we get a down tape, meaning a continuation in the sell-off, they'll start selling 9.7 billion. But look over the next month. Globally, they're looking at buying a lot. But look at SPX. Globally, they want to sell over the next week. They want to buy SPX into the billions. And over the next month, globally, they'll start buying. And look at SP. Oh, like 50 billion we're talking about in this range, looking at all that. That's a lot of buying. So that bodes well for us to go breaking out. That fits my bigger picture I've been saying for so many months that we're likely going to have a blow off top, come into the mid sixes, and then we're going to get the big one. Some people thought this was the big one. No, it could be the beginning of the big one. If we can't go breaking out to all-time highs and we get rejected up here and we get rejected down, then yeah. But that's what I said. Before we break 7, we're going to break 4. Even with a blow off top. Before we break 7, we're going to break 4. And who's in the 4? Magic Fibo on the monthly chart. Amen? What about the NASDAQ? Same thing. We've got to break the prior highs up here. And then we're going to need to break the zone from the prior high to low. We still need to do the same thing. My 618, 786 zone, which is right there, right around 20,002 up to 21.2. So right in this zone, we got to break that before we start looking at 23.3, 24, maybe reversal up in the 25, 26 zone. I don't think we're going to get much higher than that. If we can get that high, I think we're going to then have the Elizabeth, I'm coming to join you, honey. If this is the end, then this little 3-wave correction should then set us for not only a new low, but a substantial lower low. Any questions? So be careful with this. This is beginning of a high to low. We're starting to look at opportunities for us to go to all-time highs again if we can muster going a little bit further. We need a couple of thousand more points to get us up to near that 20 to 21 range above the Magic Fibo. Then the same rule would apply. We start closing above the Magic Fibo, start breaking above the 618. That gives us a 75% chance we're going to visit at 23.3. Any questions? But this could warrant this little bounce so far as we're struggling and consolidating could allow us to have some sort of retracement back down to then bounce before we make the run up toward the Magic Fibo. But that was the CTAs for the trading algos for SPX, but the same for the NASDAQ. I think we're due, likely, this is what we were looking for, a blow off top before we get the big one. And that would probably be in late fall, mid to late fall. So we're talking weeks and weeks before we probably get the correct answer. Or are we going to get rejected to go this? Or are we going to go breaking out? And then once we get that, it'll probably take several months into late fall is the plan to get up here for this blow off top. So be nimble, because I'm not really expecting this to go ripping straight up here. No, I think it's going to take multiple months to get up there if it happens. And until then, when do we feel warm and fuzzy? When we break above the Magic Fibo. That's simple. RTY. This one's a little bit different. I don't see us breaking all-time highs, no matter what. I don't care if the SPX and the rest of them, ES and NASDAQ, the Dow, they all go ripping to all-time highs. I do not see the Russell making all-time highs. I see the Russell making lower highs, lower lows. And be careful on this latest correction. If that is the 5 waves down, It might be. It also might need one more flush before we get that retracement into this 2200 level. But the same rule would apply. Right now, we have a swing point low right there and the swing point high. I definitely expect we're going to grind into the 618786 zone, which is roughly around that 2000, 2100, that's 2185, and the 272s upwards of the 22 area. So I'm looking for us to eventually give us a three-wave correction that gets us up into this resistance zone. Amen? But a little bit of warning on this. We may need one more little flush before we get that. This is kind of like that and oil right now. This just doesn't look like it's finished the last flush. Because especially where this is consolidating in this zone, if we were going to break, you think we'd be pushing more like ES and the rest. Substantial retracement, much higher than what we're seeing with RTY, right? So be careful. Yes, I think we're going to go up here. Pay me now, pay me later. We're going to go test this zone up here. And then it's an ideal sell because once we finish this thing, my target is down here about 1400, 1200 zone. And we get to say 22, put spread, go many years out as I can go, and look for this thing to push down to 14 to 12. So I've been calling for this forever, since we've been discussing this for the last several months and even years, that all of this chopping, overlapping price action, we need to break the 1600 level and make new lows. It's coming. The question is this the bottom where we go up here now, or do we need one more little flush to then get up here? But either way, Mr. Tucson, when we're up in that 2000 plus and higher, I'm looking at a big push lower into Elizabeth. I'm coming to join you, honey. And this technical picture, overlapping, chopping, grinding, grunting, laboring action, screaming, we need new lows. Amen? We desperately need new lows to correct this pattern before we can go breaking new highs. Amen? And I've been talking about this the whole time. I said a long time ago, we're going to break 1600 before we break that 2500. And sure enough, we went up to test it, rejected, and still living the large down here. This is where we're going. So Emil, we can get that rally now into the 21-22. That is an opportune time to look at some sort of put spread down over the next few years. Give it plenty of time, far out as I can go, because that's a big decline from 22 down to about 14, 12. Big move. Kind of separates you. But that's the plan. No way are we going up here before we come down here. No way. I think that during the correction, we're not going to go breaking highs. We're going to get into this resistance zone, and then we're going to get rejected. But be careful on this bounce. This may not be the bounce that gets us up here yet. We may need one more flush to then go up there and get rejected. Amen? When do we get a little more further? Well, it's like everything else. We need price to prove its intention. And from the daily perspective, I think we're definitely going to come visit the Magic Fibo at some point. You can see it's turning down now. It's right around 21 plus. You can see the line is thin now as we've been declining. Was thick going up. Then it started to flatten out when we started pulling down, and now it's sloping downward. See it? So I definitely think we're due before we get to that 1200 way down there. We're due for a three-wave correction to come and test that Magic Fibo line into that resistance zone, and then it sets up the big drop down at 1200. And if that doesn't hold, we could go down to maybe below 1,000. Ouch. To extend down here to about 900 zone. So be careful. We can get up here, set an alert, whether it's today, tomorrow, next week, next month, 6 months from now, whatever. If we can get to that 21, 22 zone, that is perfect time to look for a big short back down and shooting for somewhere for that 14 to 12 zone. Amen? All right. Quickly on the Dow, it too is in the same boat. Are we going to get, remember the other day when we talked about, and this is in let's see, our classes, I said, expect, where is it? Let me freshen this. And markets need a new low before reversing. Man, did we get a new low? Mr. Tucson, we got a hugely new low. But I kind of warned you about that. That was the other day. We needed a new low before we reverse. And sure enough, let me go back up here. We got it, right? We got that before we needed a new low. We got the big flush down in here. And now it looks like we want to reverse and go back up. Right. Do we go breaking all-time highs? I think if they're going to do it, they're going to do it together. ES, NASDAQ, and Dow. We're still headed back to the same resistance zone. From the high to the low, we got to get above the 618 for the Dow, roughly around 42,000, and up as high as that 43 and change. Above the Magic Fibo, we start closing above the Magic Fibo line, then we have a what? 75% chance we're going to go visiting 46. 70 plus, we'll go visiting 47. Will that be the blow off top we get before the big reversal? Amen? Or is this already the beginning of that? So if we can't start breaking above this and we start breaking back down, and from that low to that high, we start breaking that 618, 78 zig zone back down, then the door's ajar to go much lower. Otherwise, we start closing above this 42 and change, then there's a 4,000 point run, maybe 5,000 plus. Maybe it goes a little insane and we go up toward 50. Any questions on that? Be careful because, again, from the current move, that's quite the retracement and recovery. So you always want to run your Fibo from the current low to current high where we're testing. As long as we hold this zone, 38.2, 37.5 area, that's this zone right here. Expect more upside. So all we got to do is hold the 0.5 to 786 zone. We hold that, and I'll change this to green because we want to see that support. Go over here, settings. Come on, let me get in there. Settings. Get out of there, try it now. Weird, it won't let me change the color, but you get my point. That as long as any type of retracement holds this zone, no reason to believe we're not going to go test this zone. And if we can close above the Magic Fibo line, game on, 46.2, 47.3 becomes a high probability. Up and until then, any pullback needs to hold the 618, 786 zone on any type of pullback. And right now that's sitting somewhere between 38 and 37.5 area. Got it? And once we start closing above 42, then we start looking for 46, 47, maybe as high as 50. Global liquidity, I look at the Nikkei. Do we need one more flush before we get it, or is this part of the global recovery and those algos start kicking in globally, right, over the next month? Global economy should be piling in big numbers, especially on that one. 67 billion, that's some big bucks right there. So that could be the one that pushes this back up. And same rule, we start closing above this big resistance zone up here, then it's game on 44, 46. Maybe we go up towards 50. I do see these going hand in hand. I cannot see the Nikkei tanking when ES, Dow, NASDAQ all go to their all-time high extensions. I think you're going to see Nikkei do the same. Fair enough? All right. Any questions on the market so far? Be careful, be nimble, be quick. I do think we're going to get a blow off top personally. And certainly looking at this new data with the over the next month, over the next week, all this buying in SPX is only going to help the cause. We got this week, we don't have a whole lot of releases, but what we do have, actually, let me go with this one, I already have it up on the calendar, is we have earnings. Netflix comes out on Thursday. We're in the midst of financials right now. And what happens with financials? Money flows into financials before the financials earnings. Then, as soon as the earnings are coming out this week, they start to flow out of that into big tech, which again, they'll be flowing out probably into Netflix on Thursday as Netflix reporting. And then the following week, we got Tesla and the rest of the Magnificent Seven. So we do have some potential catalysts going into this later this week and next week, along with all the algo buying. And let me come back over here that we could see we start breaking out as we go into this fall and we get some all-time new highs. Amen. So be careful. I do think there's a good chance this is not off the table. Even when this doom and gloom was happening, I was very positive saying it's not over till it's over. And one we don't want to see is the big pullback in a three-wave decline that fails in this zone. Then it sets up the much bigger move lower. Well, this will not be avoided. Even with all-time new highs, woo, awesome. It's coming to visit. We're going below 4,000 before we break 7. So remember that. Amen. All right. A couple of things we've been watching is Tesla. It's just been chopping, grinding their report with all the Molotov cocktails and destruction of property and all of this insanity that's going on. Stock's kind of just chopping. I still think Tesla's going to go breaking out. I still think it's headed to 500, 600. We get the markets to go breaking out. I think Tesla's going to do it too. And that being said, we have the robo taxis and a lot of these big players, BlackRock, Vanguard, a lot of big players have been buying millions and millions and millions of shares of Tesla. What I also like what I'm seeing is based on this zone, it's holding our resistance zone. Remember the zone we always talk about? That 0.5 to 0.78 zone, that as long as we hold above 200 basically, then no reason to believe we're not going to go breaking out. It is a measured bounce in the making for us to start shooting for some extensions, 530, 560, 600. So that's where I still think we're headed. The news this summer should push this thing catapulting higher. I mean, that's what everybody's buying all these millions of shares for. So I haven't given up on Tesla. We do have earnings next week. That could set the tone. Maybe that's the catalyst that gets this thing ripping. Or maybe it's the catalyst that gets one more dip before we rip, but we shall see. And the plan much further into the summer, into late fall, If our markets do what we think they're going to do and they do a blow off top, I can't imagine Tesla going down while the markets do a blow off top. So the plan is for the algos to not only buy Tesla, but part of the same scenario, and we're going to go ripping. TSLL was able to get in on some very low prices down here. I'm looking forward for this thing to go breaking out. If it works out its plan, you're talking going up in the mid 40s, maybe 50, which sounds insane. But last time we talked about this in October, I said consider the TSLL trade. And sure enough, that Tesla was going to 500. This thing went from $8 to 41 and change. Not too shabby. So now this is markets money, rinse and repeat. I still think this thing's going to go breaking out, and could be wrong. Sure. There's always a chance that it could implode. And Elizabeth, come to join you, honey, is just underway, and we go much lower. And I don't see Tesla breaking out if our markets don't break out. Got it? So it's kind of fitting hand in hand. So I do own TSLL. I can't tell you what to do. No buy, sell to hold, but I own it, and I'm going to keep it until it's time to sell it. Amen. And it could be as early as this summer to fall. Maybe we'll be up here sooner than later, but I'm willing to hang on. Because remember, Tesla's more than just an EV company. Robots, they got all kind of things. And these robo taxis and everything else that's in the making. All righty. Remember, Netflix is in the process of earnings later this week. So if they blow doors, this thing should shoot up to the 1100 range minimum. That's kind of the plan. If we get any sort of big pullback on earnings, I might consider buying the dip, especially if our markets are holding our zone and we're expecting to blow off tops. But knowing Netflix, it'll probably pop on earnings later in the week. And if I was in that looking for where would I look to take profits, somewhere around the 1100 be an ideal place. Amen. All right. We'll look closer at this maybe on Wednesday, tomorrow, or class on Thursday. Is earnings before or after the close? I can't remember. I think it's after. I'll double check that. If it's after the close on Thursday, then we can review it a little bit tighter. But this will be the kind of the feeling for what's going to happen during this breakout. And if we do get big earnings, let's see, it might tell me here. Get that out of the way. After the close. Expecting 5.6 versus 10.5 billion. How about that? So, Mr. Tucson and others, this might go popping up here. This would be a great place for it to take some profit. If we get better than expected earnings, catalyst to go up there. Would not be surprised at all to see it run in this zone. Mara hanging in there, just kind of chopping and grinding, still waiting for Bitcoin to do its thing. So, are we going to get it? I do think eventually we're going to get it. So we still have several more months to go. We bought low. We're going to be selling higher. I took some profits on these runs when we bought low, went up, tripled, and a few things in here. But I still own several hundred shares of this, looking for this to go much higher as Bitcoin rips. And the plan is when Bitcoin can finally start breaking out, and we get to this 115, 120 range-ish and higher, the profit margin for those miners is going to go through the roof. And that would be a Jimmy Neutron jetpack for Mara to go ripping higher as Bitcoin hits this zone and then makes the last trek into that 150, 175. It's kind of still the plan, even though this pullback has been time consuming and boring and just gnarly. I still think it's got one more pop before we're done. And 12 to 18 months, we're not officially at the 12-month halving yet. It was the latter part of April when we had the halving, so we're not quite 12 months in. And Bitcoin typically rallies 12 to 18 months. So that puts us into September-ish, mid to late fall. So let's see where we are. The plan is still to get up here. So I'm still holding on that when we get up in this zone, that Mara and those stocks should really go ballistic because their profit margin is going to go through the roof. And that's when we should see a massive surge into Mara. Now, Bitcoin has to do it now in order for that to take place. But I'm still up in profit. I bought Mara down in the single digits, and I'm still in profit. Plus, I took a bunch of profit on their initial surges. I don't know about you, Emil, but when I buy something at 6, 7, $8 and it goes to 30 plus bucks, I just got to do something. I just can't look at that and go, oh, that's nice. Yeah, it's nice. So I take a little profit and then I know I'll get some dips. So I still have hundreds of shares still in the game. And I'm looking for that big pop. And this thing should go supersonic if Bitcoin can do it, which I suspect it will still. But that's kind of the profit margin zone. When it starts reaching in this zone, just check out what happens to Mara and those miners. They should go ballistic to the upside. And another thing I need you to do is cross your fingers. Notice so far, let me pull this up. So far, we have 3 green days, trying to hang on. I'd like to see Bitcoin close today with a third green candle. And then Ethereum's kind of, ooh, it's down to a doji. We got 2 green days and we're doji right now. But I like to see the third green candle here. We thought we were going to have it going into the big announcement in April with the tariff deal. And it turned out it didn't end up closing a green candle. So what's the goal? Is you need Ethereum, ETH1, the Ethereum futures have 3 green days in a row, along with Bitcoin having 3 green days in a row. And if that happens, it typically signifies a 2 to 4 week run. And that's 95% of the time. I like those odds, right, Emil? We get Bitcoin, BTC1, this is the futures, to give us 3 green days in a row, and Ethereum futures, 3 green days in a row. And you see it's not cooperating. It's now doji, but it's looking a little red. So we can get 3 and 3. So hopefully we get a push this afternoon and we get this to close green. That sets the tone for 2 to 4 week run on Ethereum and Bitcoin. I'd like to see it. It's overdue. Overdue. Any questions on that? So that's just something I've watched over the years. And you get 3 green days in a row, both Ethereum futures and Bitcoin futures. And you typically have a 2 to 4 week run. And it's substantial run, not just, oh, it'll go up $100. No, it's substantial run over the next 2 to 4 weeks, if we can get it. So everybody hope for the best. And Emil get Ethereum to pop a little bit to turn green, Bitcoin to turn green. So we'll check back on this tomorrow's class. Yep, it's listening to me. It went back green right there. So we want to go green and close today. Hint, hint, hint. We need to close. And then we can look for a 2 to 4 week run. I like it 95% of the time. Any questions on that? All right, let's finish up with the other markets and call it a day. Be careful with black gold Texas tea. This typically does not look like the end. It looks like we need one more flush. I talked about it a long time ago, right, Dan? That be careful with the bounce, where we're likely going to go back below that 63, 64 low back in here in May of 23. All of this overlapping chopping action since this corrective move and this low, all of this overlapping chopping corrective action screamed we needed a new low. We did that. And then when 60 didn't hold, we went halfway down to 50. But based on that latest little push, this doesn't look finished, right? This does not look finished. It looks like we need one more flush lower. Then I expect black gold to have a big surge, and we'll see what happens then. But if we don't hold 50, man, we could go down to like 30. That's the next big gap zone. If we can't hold 50, then we got this big consolidation zone in the 30-ish range that we might go back and revisit. So I'm not trying to say doom and gloom that oil prices are going to continue to crater, but currently we've been pretty good with buying dips and selling rallies and kind of giving you overall view of where gold, black gold, Texas tea is headed. And Emil, this just does not look like this is ready to go ripping. It looks like, based on that movement, it needs one more flush. And I would love to see one more quick flush down to 50 and a big rejection wick. Amen? Maybe this sets off some kind of war with Iran. Who knows? But this looks like it needs one more flush. So if you're buying this little bounce, be aggressively, moving to a position of authority, because we're probably going to get that one more flush. All right. And also, looking at the software, it is definitely setting up for something big. That's why when we have a monthly, weekly, and daily oversold, which is the case, here's the daily, kind of reversing a little bit, the weekly still in oversold territory, the monthly. So even if we get that flush, I'm looking for what? This to disengage and start cycling up over the coming months, and we're going to get a nice pop. Amen? At some point, black gold, come back to the big picture and go to like a weekly. Let me see if I can get enough on the weekly. Maybe I got to go to the monthly. But yes, on this latest surge to the low, we're due for at least a 618 retracement. Maybe we push it somewhere in a 618786. So maybe the last flush is down to 50. Then we come up in this zone. I think at some point we're going to test this zone. Any questions on that? And from all-time high, it still puts us the same kind of thing. From that high to that low, we're still going to be in that same zone. So this is why I think one more flush, then we have a substantial rally based on a monthly oversold, a weekly oversold, a daily oversold. So Salivate City, man, when we start to get a monthly hook and across, that means a weekly is going to cycle all the way up, and we're going to see oil prices go ripping higher, not necessarily from 12 bucks to 100 plus bucks, but man, did that set up beautifully when we talked about that years ago when it was negative due to COVID. This is an unbelievably low opportunity for you to buy for oil prices to recover. Since then, we've been correcting back down, and even with the bigger picture, and it's hard to show it on the scales because it's negative on some of them, but looking at the Fibonacci retracement from the low, oops, I keep doing that when I'm in different platforms, kind of jack that up, but you do your Fibonacci from the low to the swing point high, and looky where we're holding. So 618, and that's what I was saying here, that bigger picture. I guess to highlight this, here's my 618, my 786. So if we don't hold 50, we might go down to 30, but then I'm still looking for a big run back up to the 90s. And what might be a measured bounce. And if war breaks out, something insane, then we could start going to some extensions up here, pushing us into, and I'll show you on this other platform so I can consolidate this. This could open the door to 160, 180. Sounds insane. But hey, from the high to the low, we start getting above this 9,800 zone, then it sets the tone. We could go up to those extensions. But that's why I think we're at least going to go testing that. Amen. And you look at the newer high to low, kind of sets the same tone that from that prior swing point high to the prior swing point low. A little bit different scenario. Let me remove some of these. But it's still the same picture, Dan. From that high to the prior low, it still put us in around that 140 area. And now we have a new low currently here that would still put us around 102 high, current low. And even if we push this down toward 50, still pushing us right around that 100 to 113 zone. So this is why I think once we finish maybe that last flush, we're due to bounce into the 90s and at least test the 618 retracement. Right? Bigger picture, shorter term picture. If you're buying that little bounce, be in a position of authority, because based on the current price action, it looks like we need one more flush to finish that correction. Amen? One more flush. Then a good buy and take aggressive profits. Get to your position of authority on the buy. And that is, again, looking at the software, monthly oversold, weekly oversold. And what I would not be surprised is to get that last little flush. This turns over, this pushes a little lower, and my daily does the same. And we're going to get a daily hook, cross. We're going to get a weekly hook, cross, and we're going to get a nice pop up. Amen? So that's the weekly. Here's the daily. So what's this going to look like? It kind of turned up for the little pop, looking for this to turn back down, push back, get that last little flush, then buy the hook, get to a position of authority, and this thing should turn out to be a significant bounce this next go around. And as you well know, you don't need oil prices to do very much. It went from 54 up to about 62. You can make money on that. That's why I want you to be in a position of authority that we're probably going to get one more flush. Then I can buy the hook yet again and look to get into profits and be in a position of authority. Okay? All right. What else? Gold. Be careful with gold. Even though I said we're due for a bigger pullback, I still think it. At some point, yes, this thing could continue to blow off top, but we need some sort of pullback back to the Magic Fibo. Again, we haven't visited the Magic Fibo in a very long time, back in 2024, which is a long time ago. We need a pullback. So I'm very bullish gold long term. This looks like a parabolic move, especially as of late. And what do parabolic moves have in common? They typically get a nice pullback. So I'm thinking at least the daily Magic Fibo. So be extremely careful. Take profits at these nosebleed areas. And yes, I won't say it can't possibly go higher. It can, but be extremely careful. We're due for a big pullback. Screaming for a pullback. Amen? And we get the big pullback, then we can rinse and repeat. Yes, I think long term, gold's headed to 5,000. I said a long time ago, gold was headed to 3,000. We're there. Now, next up is 5,000, which is way up the food chain. And yes, we'll probably ping pong between these, but I don't see us just going straight up to 5,000 without that bigger retracement. And minimum, we need a visit of the daily Magic Fibo. Amen. Silver, still think it's not breaking all-time highs. Nowhere near all-time highs. It is underperforming gold like Ethereum is underperforming Bitcoin, but it still meets the same criteria. And I love SLV. Nice way to trade it. Go out to a weekly, show you what we're looking at. We have a target of $60 to $70. We're absolutely, positively going to get to $60, $70. That is probably the tip of the iceberg long term, multiple years out. But I think we should see this price action somewhere probably this decade. Maybe it's 26, maybe it's 27. I wouldn't be shocked to see us push this into 26 and 27. When we get Elizabeth, I'm coming to join you, honey, and the markets start really tanking, the big correction, the big one I'm talking about, I see silver and them ripping to this target. So is it going to be this year and the next year? Is it the end of this year? Is it end of 26? I don't know about timing. That's why I buy shares and I sell them when they get up here. So, Mr. Tucson, you can go to your Robinhood account or any account, buy SLV, let it sit there and put a pending sell order when it gets to 60 and sell some more at 70. It will trigger one day, not years and decades away. It will trigger. No question. This is screaming breakout to this target. Why? From the high to the low, we already closed above the 618 and we haven't broken the 786, but the rule is you get a daily candle body. Well, we got dailies, we got weeklies, we got monthlies that all closed above that say we have a 75% chance we go into 60. We have a 70+% chance we go into 70. And all you got to do is buy shares and hold it. Now, if gold gets that correction I'm looking for, we might get this down to salivate country and we get to 25 or lower. Not out of the question. Silver has not broken a new high like gold has, and gold's not only broken highs, but all-time highs and then some. Silver has not. So when silver decides to finally, it's my time to catch up with gold, this is the tip of the iceberg. But in my humble opinion, Harold and others, no question we're going to 60, no question we're going to 70. And whether you buy it at 29 or you bought it the other day when it dipped down to, was it 26? We didn't, 27. We didn't quite get to our, what was the low here? Went down to 26.57. So we didn't quite get to 25 and lower, Emil, but it doesn't mean it's not still going to happen. But buying between 26 and 29, not that big a deal. Even if it comes down to 25 or lower, not that big a deal. What would I do if I bought some here and it dips down here? Buy more. By all means, buy more. Because we're going, no questions, in my humble opinion, 60 to 70. That is if there is such thing as a guarantee, that's it. 60 to 70. Now, what I can't tell you, Harold, is it today, tomorrow, next week? No. I can say it's not that, but is it the end of the year? Maybe. If we get the blow off top into late fall and we start Elizabeth tumbling into the last half of the year or into early next year, this thing might reach it. Whether it's today, tomorrow, next week, next month, I don't think it's next week. Next month, probably not. We're talking about the rally into the 63, 64, 6600 for ES, 24,000, 25, 26,000 for NASDAQ, late fall, and then we get the tumble. So year end, maybe kind of pushing it. End of 26, very likely we'll probably be up here. But I can't really give you a time. That's why I just buy shares and I set my sell orders up here. Right? Buy, sell. And I could set them already. I can buy today and set my sell orders at partial. If I buy like 100 shares, I'll sell 50 at 60 and 50 at 70, as an example. No buy, sell to hold. But in my humble opinion, if you want to know a likelihood of where this thing's going, it is already solidified. It's going there. It's just a matter of how long is it going to take. And it won't be decades. It might be a year-ish, but I think it's going to happen sooner than later, but no later than later. And all you do is buy, and then you set your broker sell at this zone. And with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Circle the wagons. What are we talking about? We're in a very peculiar situation right now on the markets. ES, let's go to a daily. I'm just going to review real quick. And yes, we're in a very precarious situation right now. We may need a dip to come into the support zone before we go breaking out. But what we want to see, no matter how you slice it, what we're looking for, even if we get a little dip, we want to see us close above the Magic Fibo and basically close above 5,600. Yes, we got to take out 5,800. That's the 618,786. But once we start closing above the Magic Fibo, I have a warm and fuzzy. We're going to 75% chance we're going to 6,300, 70+% chance we're going to 6,500. Kind of time frame would be fall. So it should take months to get up there. And don't freak out if this thing turns down. As long as we hold that 618,786 zone this way, from the low to the high, as long as we hold it, we're good to go. And we still expect this is still on the table until price proves otherwise. And we get warm and fuzzy once we cross that threshold of above 5,600, sets the tone, aka above the Magic Fibo. Daily candle close or weekly candle close, the body, not the wick, sets the tone. We're going to all-time highs again. NASDAQ, rinse and repeat. Be careful. We may need a little dip before we can rip. But once we start closing above that 20,000 plus, right over here, 20,002 up to 21,2, that's my 618,786, this pink box. So what do we need there? We need to close above the Magic Fibo. That sets the tone. We're likely going to go visit the 23, 24, maybe a blow off top towards that 25, 26. Amen. That's when we get warm and fuzzy, when we start closing above 20,500-ish. So we'll be above the Magic Fibo, we'll be above the 618, and then resistance up at 21.2. That's the 786. You can see where price action, form a resistance, turn support, support, resistance, support, resistance. So this is why that 56 to 5,800 on the ES is so important. And this 21.2 to 22, 20,200, 21,200 zone is so important for the NASDAQ. Then it's game on to go much higher. And last but not least, IWM. The best we're going to do is get up here to Magic Fibo area and somewhere in that zone. And then it's a beautiful setup for the Elizabeth, I'm coming to join you, honey. And once we're in that 215, 213, 15 and higher, maybe we go up to that 786, pushing the limit at about 220-ish. That sets the tone for my big move down into that, not only below the first target, but somewhere probably in that 14, 140 to 120 zone. So talking about 1,000-point drop potentially from 220 to 120, 100-point on this one. That's huge. And I'm looking to set up some sort of Like in this one be 2200, just same type of thing. But I'm looking up setting a debit spread and pushing for that 14 to 1200 zone as we rally into the 2200, 21, 2200 or higher. Big time shorting opportunity to come down over the next few years. That's where Elizabeth, I'm coming to join you, honey, is going to push things down to. All righty. So again, take care. God bless you. We love and appreciate you. That's it. That's all. We'll see you tomorrow.